What's up, guys? I hope everyone's having a fantastic day today. So guys, what we're going to talk today about is news, fundamentals. What are these things? We have FOMC, we have PPI, we have CPI. We have so many different random names that no one actually really understands, and we don't really implement these because we don't think we need to know them. Guys, this is the most silliest way to trade. Did you know that the institutions and the hedge funds decide on using news to actually position themselves? So if they're doing that, why aren't we? Let's go jump into my computer where I can give you guys a little bit more of an understanding, okay? Because I really find that the fact that we aren't implementing, or the majority of traders aren't implementing this, I think it's very, very silly. So as I have all my notes right here, we're going to jump into this. I'm going to get a little bit more of an understanding, okay? Sweet, let's go. What's up, guys? Okay, so now that we are in my computer and we can do something about this new situation, I mean, I can only imagine how many people must get frustrated.
What am I doing?
With all of these crazy different random names that always come up. So what I was thinking of doing is just showing you guys how you can implement these things, but please remember, use discretion, guys. Please do your own research as well with regards to all of this stuff. Use something like Forex Factory or CNBC News, or actually watch the CNN live information and then write down the information that's being said, and then go look at the markets and see how these actually affect the Forex market. Because a lot of us do this way too often. We get into the markets, we trade our plan, and then it doesn't go our way, so we decide to trade more. But why? If it doesn't go your way, you should be like, okay, I'm done with the markets. Okay, even if it does decide to go and then all the way back up, your plan didn't work out, it's fine. It's not about being perfect in the markets, guys. It's about having a good risk and understanding that there is opportunities in the market when these things happen. So what we're going to cover today, guys, is FOMC, PPI, and CPI. Why these three? Okay, so I'm going to read here the information I have. I'm going to put it up on the screen, and then I want you guys to just see why it's so important, okay? So first of all, number one, what is PPI? Okay, PPI, guys, is the Producer Price Index. This is an economic measurement of average changes in selling price received by domestic producers for their outputs. It is a leading indicator of consumer price inflation, which accounts for majority of overall inflation. Okay, so now we know PPI, inflation. Okay, guys, let me read a little bit more. Okay, in the Forex markets, when PPI increases, it may signal future inflation, which can increase the value of the country's currency, as investors expect central banks to raise interest rates to combat inflation. Okay, so what we're understanding right now, guys, is PPI has to do with inflation. Okay, now when inflation increases, what did I just say? The central banks are going to increase rates. So now we know PPI and inflation are literally one and the same. And we now need to obviously take that information and then see what is the central banks going to do. Do they increase rates? And if they do, then you understand that now we have a increasing currency value for that currency. Okay, so let's go more. FOMC, Federal Open Market Committee. The FOMC is the branch of the Federal Reserve that determines the course of monetary policies. FOMC meetings are closely watched by investors and speculators alike. Decisions on interest rates, quantitative easing, or insights into the state of the economy can lead to sharp swings in the Forex market. Higher interest rates can make the country's currency more attractive to investors, leading to an appreciation of the currency, while lowering interest rates can result in depreciation. What are we learning here? Very easy to understand stats. Okay, we now know PPI has to do with what? Inflation. Okay, so now if inflation is going up, the Federal Reserve has to do what? They need to increase rates. So what we do therefore is we wait for the FOMC meeting to decide, is the PPI results bad enough for them to increase rates? Guys, this is all we need to do. Now, once you've got all of these written down, you can actually go to the market and then execute. But don't do it before. Why would you want to do it before? Did you see what it said? Okay, so let's jump back into that quickly. Let's jump in. Okay, decisions on interest rates can lead to sharp swings in the Forex markets. Okay, so guys, can you see why it's so important for you not to be trading during this time? Because I don't know if any of you guys have been in it, but that's happened to me several times where I have an absolutely stunning setup. I mean, there is everything. Fibonacci, resistant level. I mean, my patterns are even telling me to enter the market, but the FOMC is about to happen, and then boom, it destroys me. Because why? This is why. It even says that we can have massive swings. So that is that crazy oscillation where you just see all of a sudden it decides to go ridiculously high and then all of a sudden comes back down and goes even low, and now you're like, what just happened to my account? Guys, I've been there, okay? I've been trading for years. I know these things. But now you can actually understand why it's happening. So during the FOMC, I want you guys to have a very, very specific reason to trade. And it's only if you have a retracement. So we need to understand that first, okay? So don't trade, wait for a retracement to happen and then enter the market after all of the crazy swinging has happened. Everyone gets screwed around there. Okay, now last one that everybody loves to actually trade, the CPI news. Okay, CPI news. Let's go in. CPI is a consumer price index. The CPI is a measure that examines the weighted average of prices of a basket of consumer goods and services. It's one of the most frequently used stats for identifying periods of inflation and deflation. High inflation can lead to an increase in interest rates and appreciate currencies, while low inflation can lead to decreasing interest rates and depreciating currencies. So guys, we now understand that PPI can help us identify inflation. Okay, the FOMC is where the decisions are made, and CPI has all to do with the consumers. Okay, so PPI and CPI are all the ones that are determining whether or not the FOMC is actually going to rate hikes. So now let's just put this into an easy, understandable method. Okay, CPI comes in high, PPI comes in high, FOMC raises rates. Doesn't sound like it's too difficult. Now I want you guys to watch what happens on one of the charts when we actually watch the FOMC come out, and it does the most unbelievable thing, just so you guys can get an understanding. Okay, so what we're going to do is I'm going to bring up the NASDAQ. The NASDAQ has an incredible volatility with regards to the dollar. Okay, so now if we're talking about the dollar news and FOMC is about to come out, watch what happens, because no one knows whether or not they're going to raise or rise, or they're going to be stagnant, and if they're not. And also guys, if a country pauses and does nothing with the inflation, then normally certain stocks and indices will take advantage of that and just move up higher. Okay, and I want to show you this quickly. Okay, so now that we've got all this little information about what FOMC is, what PPI is, what is going on, we can actually now go and actually mark into it. So let me just bring that up for you guys. Okay guys, so now let me just jump into my screen here. Bang. Okay, so guys, like I said, the most important thing was to understand those few things. Okay, now that we understand them, let's go and see what happened. And I want to bring this up quickly for you guys. So remember I told you, go to Forex Factory. This was Wednesday the 14th. How do I know that? If you just like literally use this little cursor, at the bottom, you will see that there is the Thursday the 15th. And I just moved it over to the 14th, Wednesday the 14th of June. Okay, now I'm just going to let this play out for you guys. Okay, so FOMC was about to come out. Some people were saying some news, and just watch what happened. Do you guys see that? Like, wow. Oh my gosh. Okay, so that's what I wanted you guys to see. there's a lot of people that don't understand that, like, this is how the markets can move. Let's just do that one more time, guys. That was ridiculous. So guys, this was your selling area, this was my buying area, and I just wanted to show you like how dangerous this actually was, because a lot of people my trade, if I actually decided to do this, would have been like this, right? So I would have waited for the market to have broken that high. Okay, let's let that happen. Okay, there. Okay, you see, it broke that high. And this is why I want you guys to be so diligent with your trading. Please, guys, it's so important just to have a good trading method. So there is a nice little impulsive movement from here to there, and that's how I normally trade. I would have literally been like this. I would have wanted to enter my trade here, and I would have put my stop loss either here or below that. Okay, but because of my lot sizes at the moment, it would have just been underneath there. So let's see if that actually would have happened. Okay, so right now, guys, ooh, you see how fast that happened. Oh my god, wow, that was way too intense, guys. So there's no ways I could have gotten into that. There was no reason for me to actually trade that. Even though it hit perfectly, it would have knocked me out actually. Yeah, it would have definitely knocked me out. I put my stop loss around about here. Like an hour later, it already absolutely milked this area. And what was the reason for it? Okay, well, let's go and look. Go back to Forex Factory, and we can see they haven't given us anything here, but look here, this information is out now. So they did nothing. They actually did nothing. So the next best thing would be to, obviously, right now the market's sort of been like, they're not increasing interest rates, so let's buy the indices. So can you understand that? If they increased interest rates, the market would have dropped way further. But it knocked everyone out of this. And now look, I want you to watch even further. They came all the way back down and then all the way back up. So the guys that thought that they could sell the market over here, okay, got into it and they were like, cool, cool, cool. And then it just absolutely reversed on them again. Okay, guys, this is the most important part about trading. There is no one that knows what's going to happen, okay? No one really can predict these things, but historically, certain areas can be affected. So for me, this area down here, as you can see, even on news, it got touched and moved up. So this entire area, I will keep a support. Okay, so it's supporting price at that area. So for me, that is ideal to trade in. And I would like you guys to please make sure that you go through this a little bit more in depth, okay? Do some practice, get a demo account, or if you're already a little bit more experienced, use a small risk management strategy when trading in these times, because it really, really will work in your favor, guys. If you catch one of these trades, it is so profitable, okay? But do not try and preemptively strike this. Yeah, I have, and just been destroyed. Okay guys, thanks so much for actually jumping in on here. I'm very glad I got to actually just express my side of the story. And remember, guys, there's no such thing as being perfect in markets. Please, your risk management is the only thing you control. In an unpredicted environment, you need to be super diligent. Other than that, I hope you guys have a beautiful day. Please remember, I have my links underneath this video for you guys to come join my little trading group, where we are literally just teaching and educating people about the markets. And I want to help people get a funded account. Okay, this is my obligation here, being a trader, and I really want to see people prosper in this kind of environment. I know it's difficult, but with a good sized account and a good prop firm, I really do think you guys can absolutely do wonders for yourself. Okay, I have these two companies that I'm working with, and they have done unbelievable things for traders. Okay, so there's no need for you to save up all of that capital one day and then lose most of your money. I think it's very silly. I think the best possible action you can take is to train with me, or with whoever you want. Actually, take this advice, I really do think it's great, is to learn to trade on a live account with a small amount of money, and once you have mastered making that account grow by 5 or 10% per month, and I would like you to actually do it over 3 months, then you know you can trade. Then once you have got that strategy and you've got that skill, then there's no way of holding you back. Go and get yourself a funded account and enjoy the beauty of making 5 to 10% on a massive account like $100,000. And that, my friends, will do incredible things for you. Peace out. I hope you have a lovely day. Don't forget to check the links in the description. I've got the free trading room and I've got some cool promotional deals down there for you guys. Anyway, peace out. Have a lovely day.